You know, we're looking at the first down day for the S&P 500 in 9. Potentially, it looks like we will close that way. And we were just looking at a chart of the VIX, especially the VIX shorts. The VIX up 2 days in a row, but still near historic lows. But VIX shorts are at levels where they have typically gotten squeezed ahead of the S&P 500 coming back down. What do you think is happening, or what could happen?
Well, you know what? I think the VIX participants are actually starting to look at more of uncertainty that is happening in the macro environment. So when we go back to when VIX was actually trading on annually below 12 and then even realized was around 8 or less, I think you were seeing a lot of fiscal and economic policies that were actually helping drive market returns, but now that's being removed as we're starting to anticipate the first earnings recession since 2016. So with a lot of uncertainty out there, it makes no sense to be short VIX, even if earnings are going to be good.
Do you think in that environment that it makes sense to be long volatility, or really just sort of stay on the sidelines?
Yeah, I think it actually makes a lot of sense to be long volatility. One of the main reasons why is you're seeing the largest sector in the S&P 500 expecting an earnings concession of 10% coming down, right? So if you think about that, and that's technology, and technology is actually more susceptible to the global market environment as most of the revenues come from overseas. So that's why you need to be exceptionally careful, because it's double the earnings that they're expecting to be down, meaning negative 10% versus negative 4.2%.
Yeah, that's really much less bad, or more bad, I should say, than what they had thought. I guess some are saying it's going to be a low bar, so it'll be beat. But anyway, you look at that, it doesn't sound great to have an earnings recession. And you have had a tremendous call, though, on a defensive sector, some of the REITs and real estate out of the fourth quarter, and that really bearish quarter. Real estate, the best sector for the S&P 500, up 12%. Yeah. So you still like some of these defensive segments of the market. Talk to us about something like right now.
It's actually pretty nice that you can go into a sector that has defensive qualities, that has differentiated correlations to the stock and bond market, but you're still actually getting that growth. And so I think you can go into names that are going to lay the foundation for the technologies that's going to permeate our daily lives. And so if I look at the cell phone tower companies, right, one of them is AMT. They actually are building out 5G for AT&T, for Verizon, right? And you've actually seen it throughout their stock. So they're up over 20% for the year alone.
That's incredible.
Yeah, and Verizon's only up 3.5%. AT&T's up 11%. So they're beating the market. Yeah, exactly. So you want to own the names that those companies have to invest in, because we're worried about margin pressures. But the margins are so defensive at an AMT because you have to build out 4G before you get 5G.
Really a stock picker's market. So talk to us about your trade on AMT.
Yeah, so because it's up so much, I think the best way to play it is just to buy the call outright going into July. So you want to buy the $195 call here. And guess what? The most you can lose is actually 3.8%. It's the proceeds you actually have to spend on it. You're going to spend $7.60 to go long the 195 call, and you get unlimited upside. So in a market environment where there's a lot of uncertainty like this, you're really capping your downside at 3.8%, but you get unlimited upside in a growth sector. They beat 8 out of the last 8 earnings, their revenues when they've reported.
Well, you've had a lot of tremendous calls on these REITs through the options markets. Thank you so much, of course, for joining us for Options Insight.